There have been lots of headlines recently in the business media on mergers and acquisitions, and 2014 seems to be an especially brisk year for such activity. This activity is local, regional, and national, and even international. So why is 2014 so active, and what does this elevated level of activity signal? To provide his perspective on these questions is our very own Jim Russell, U.S. Bank Wealth Management Senior Equity Strategist. He joins Business Courier publisher Jamie Smith in the studio for this week's U.S. Bank Economic 360. Gentlemen.
Thanks, Peg. Jim, thanks again for being here. It's always a pleasure.
Good morning, sir.
All right, activity in mergers and acquisitions in recent years hasn't been that high. What's going on this year? Why all the activity?
Jamie, it's a good question. You know, for lack of a better term, it's just basically business confidence. While the local, regional, national, and international business community remains a little bit weak, cash on the balance sheets remains pretty big. It does seem to be a more clear line of sight on what's going to happen perhaps in the months, quarters, and years ahead. The number of number of companies listed on the exchanges is down dramatically over the last 15 years. Much of that is merger and acquisition. Some of it is private equity. So more companies are coming off of the exchanges and being privately owned. Attractive interest rates, economic downturn have all fed into this. You can see a graph of just how dramatic the number of companies that have no longer publicly traded has been. It's about a 42% decline in the number of companies traded on the exchanges. So you can see that this trend is not only pretty dramatic in terms of scale, but it's fairly long-term in nature. And we think more of that is pending.
It's pending. Well, in terms of capital markets, does this elevated level tell us a lot?
Yeah, it does. In past peaks in merger and acquisition activity, and we're not in a position to predict that we're in a peaking period, but we seem to be headed towards some times and places where merger and acquisition activity have peaked. You can see that those have represented equity market peaks in the past, year 2000 and of course 2007. You can see where the activity is. It's headed toward that peaking type of profile. We do think that the merger and acquisition activity in the current environment is very responsible. The prices are not egregious. The terms that these companies are coming together are accretive for both companies, and so we think these particular deals make a lot of sense. In the past, maybe less so.
Okay. Does any of this activity translate into companies going public?
Yeah. You know, that's the opposite side of the equation, right? Where companies actually are private and they seek to be traded on the public exchanges. So we have seen an elevation in the type of activity, but you can see that this profile represented on this graph does not really look like it's going to represent a peaking type of period. There has been a fair amount of market discipline where companies that frankly don't have the stuff to be a public company are being discouraged from coming public. So we think that's a healthy trend as well. Okay.
Any other specific trends out there? Any lines of business that we're seeing? I know in the Courier we're constantly writing about, you know, the law firms, the accounting firms. Right. A lot of that going on here.
Right. We've seen that. We've seen healthcare and technology also be very active, both in the merger and acquisition type activity and the IPO activity. So those two industries, sectors, particularly appear to be pretty active.
Well, great. Well, we will continue to watch, and I'm sure we'll talk about it again here before long.
Sounds good. Thank you, Jamie.
All right, Jim. Thanks for being here.
Thank you, Jim.
Peg?
Thanks, Jamie and Jim.